This shocking indicator predicts billions will be wiped out starting next week. If you own tech stocks, this is one show you don't want to miss. Plus, tonight's show is brought to you by Oncolytics Biotech, and right now the biotech sector is on fire, and they're a trailblazing company developing a groundbreaking cancer treatment, and I think their stock could transform your trading account, because if you're an Elliott Wave trader, their stock is in the early stages of Wave 3. This is one stock you don't want to miss. You can find it on the NASDAQ and the symbol ONCY. Everything you need to know in the pinned comment and description below. But just because we're facing the AI bubble bursting doesn't mean there aren't other opportunities in the market. I'm going to show you where they're at. Plus, I've got a trade set up for you on Monday. Let's dive in, because Goldman says it's back to school. And right now, the worst seasonality of the year is upon us. And again, this starts on Monday, because September is the worst month of the year. And so far, we haven't seen it. But wait till you see this indicator. It's predicting the rest of the month is going to get bad. And then going into the later part of the year, things could get much worse. And Goldman notes that systematic demand has dried up, removing a key piece of support. We'll take a look at that in more detail. Institutional investors, as I've been warning about, have net sold U.S. equities for 2 months straight and are staying cautious. And right now, they're expecting this month to be challenging, and again, for good reason, because back to school, well, what it suggests is the flows now are about to go all the way down. And here you can see the seasonal composite flows of September, and you can see right here in the middle, and then it nosedives going into the end of the month. And there's some good reasons for that. And the main one right now is CTA positioning, because Goldman notes they're gone, as they now sit at the 100th percentile and are maxed out. And this is a major problem, because machines are indiscriminate buyers. If the trend is up, they buy. But the problem right now is they're all in. So if there was something that was going to drive the market down, the machines are going to start cutting and selling in a major way. And that's one of the risks we're facing going forward. But starting this next week, there's a lot of hurdles coming toward the end of September, and I think it's going to send stocks tumbling. But let's take a look over the next week. You see there's virtually no buying, but over the next month. But in a down tape, we could see CTA selling global equities to the tune of almost $220 billion, with nearly $74 billion out of the U.S. And again, this would send stocks plunging. But there's another major risk coming, and you need to put this on your calendar. I warn about it every quarter, and well, it's back. It's called the buyback blackout window. Again, mark it on your calendars on September 15th. That is when the window starts. And of course, one of the big issues that we're facing here is tech companies are massive buyers of their stock, and they're going to head into blackout. And again, a key piece of support holding the NASDAQ up is going to start to go away. But right now, everybody's saying, look, there's going to be Fed rate cuts, because 2 days after the blackout window, well, we hear from Fed Chair Jerome Powell, highly likely to cut rates. And Bank of America says, look, you shouldn't be excited about that at all, because if you take a look at the Dow Jones Industrial Average against the federal funds rate, that's shown in light blue and inverted, that easing cycles are not good for stocks. Now, you may remember a couple weeks ago, I told you that if you look at rate cut cycles, you have perhaps upwards of 3 months from the first cut before stocks start going down. But wait till you see this indicator. It says it's starting right now. And we've been talking about this for a while, because, well, don't hold your breath, because it's all about breath. Let's start with the S&P, and then we're going to get right into the NASDAQ, because we've been talking about the percentage of S&P 500 stocks above their 50-day moving average. It continues to decline. Now, why does this matter? Because when a stock trades below its key moving averages, in this case the 50-day, it's deemed to be bearish. Now, the problem for the S&P is more and more stocks are falling below their 50-day, and where breath goes, well, that means price falls. And you can see very clearly here that breath was rallying, price was rising, then all of a sudden breath gave away. Price continues to go up, but this won't last. And we think this is setting up a major move in their stock. Let's take a look at this chart, because what do we see? If you're an Elliott Wave trader, this is exactly what you're looking for. This is wave 1, and then you get a pullback. That's wave 2 right into its 50-day moving average, and then you start wave 3. And this is usually the biggest of all the waves, setting up a monster potential move. Now let's take a look at our screens here, because what do we see from a technical perspective? The relative strength index is at 59. The MACD's got a negative cross, but the MACD trades all over the place. It's very inconsistent. But when you overlay the trend, we call this our own Momentum Timer Pro, you've got 10 consecutive buy signals. So right now, what are we seeing from a technical perspective? Momentum is still up, but it's the underlying issues with breadth that are breaking down. Now we talked about machine positioning, it's maxed out, but we model this as well, but we run a historical overlay. We call this our CTA Timer Pro, and our fast algorithm is predicting that if things continue, the machines are going to start selling here. Now let's take a quick look at the chart, because I really want to get into what's going on with tech, and what you can see is sitting right above his 6-month volume profile. The risk here is if it breaks, you're going to see selling, because this is where most of the shares have traded over the last 6 months, and there's not been many trading days that it's sat there. Again, you talk about some key risks for this market, and you can start to see it. Everything is starting to break down, and the big leading indicator here is breadth. Now, I've told you we've been changing the game, the way people trade. Well, check this out. This is our meta strategy. Now, I'm not going to go into this in detail, because as we speak, as I'm filming right now, the optimizations are running. I had some hiccups with it, but by the end of today, I should have a fully optimized meta strategy. It's all AI enhanced, every underlying signal. We're changing the way people trade. Now, how do you get in on this? Grab those links in the description below, use a coupon code for your free 30-day trial, and while you're there, check out the stock for our sponsor for today's show, Oncolytics Biotech. Again, you can find them on the NASDAQ under the symbol ONCY. But let's take a look at the tech sector, because so many people are overweight tech. Everybody thinks that AI is going to drive massive profits. But right now, breadth is saying it's about to come collapsing down. Let's take a look, because the percentage of NASDAQ 100 stocks above their 50-day moving average is now down to 48%. And you can see it didn't participate in this rally. And remember, I warned you, I said, look, this is not a good sign. And everyone said, nope, Steve, you don't get it. Tech is going to rally here. But look at breadth. It's pulling back here, and that is a major warning sign. In fact, we now see momentum turning negative as the trend is down, MACD is down, and the RSI is cooling off. And what do we see from machine positioning? Well, we're modeling that those CTAs that trade tech stocks are going to start selling here. Now, one thing that's unique is because of our historical overlay, we tend to have a kind of predicted pattern of where these CTAs are going to go. They haven't started selling yet, but watch out, it's coming soon. Let's take a look at QQQ here, because what do we see? The same thing as the S&P 500. It's trading just above its 6-month volume profile, and you've got the 50-day here in green acting as support. But again, the risk is breadth is pulling down, price likely to follow. You get a break of that 6-month volume profile, and you can see this thing's likely to come down all the way to the 200-day moving average. And again, the key part here, there's been a lot of selling up here, and price hasn't gone anywhere, which indicates there's a lot of big players that want out of this market. And again, we've talked about who they are. They're the institutional investors. They're hedge funds. Who wants to buy? Retail and CTAs. And now what's happening with CTAs? Well, they're getting ready to sell. But remember, of the 3 major indices, there was one I said, look, if you're going to be bullish on anything, this is the one. Let's talk about the Russell 2000. Because what do we see here is breadth continues to support price. And that's one key aspect here, that even if breadth pulls back a little bit, you can see there is a move higher. Let's zoom in, and what do we find out? Well, we've got 10 consecutive daily buy signals on this from a momentum and technical perspective. Now, we did have a trade back on this on the 25th to our Momentum Timer Pro subscribers on a very volatile day on the 2nd. We got stopped out for a small loss. And this is something really important when we talk about trading. It's not just about your wins. It's about controlling your risk and using stop loss levels. Remember, you can always come back into a trade. Now, this is what makes us very unique. A lot of people just sell signals. We also give you risk control levels and tell you when to raise them. Again, that's a key thing. You don't have to sit in front of your screen to trade our reports. All you have to do is follow our instructions. And right now, what do we see from a machine positioning? Maxed out. What do you see from momentum? On a 1-month, 3-month, and not quite a 6-month window, you see momentum is stretched. But that means that right now, if you look at the chart, price can go higher on small caps. Let's take a look here, and what do we see? It hit the 6-month volume profile, it pulled back, it shot up. You can see right here in that big gap down, we got pushed out on our stops that day. But let's zoom out to the 2-year chart. I made the case, I think it was last week, that we could face a double top here. The small caps are likely to push higher, and sure enough, that's exactly what you're seeing here. But keep in mind, once you get to that double top, maybe a good place to raise your stops if you're in that. Let's continue on, because, well, one thing you got to do is when you're making money trading, you got to celebrate. And here's a great example of that. Our agricultural commodity trade on DBA, we put it on the open on the 7th. On the 2nd, we got stopped out for a nice 4.21% gain. And again, my friends, we make it that easy for you. We give you the trades, we give you the risk control levels. You just pick the trades you want, and soon we're going to have fully optimized signals for every security. Again, we're changing the way people trade. The goal is put more money in your pocket. But let's talk about money in your pocket. With that, we've got the energy sector. And right now, some people are bearish, some people are bullish. But what does the chart say? Well, it tends to, I think we got a signal that could be bullish here. Let's take a deeper look, because we've got the RSI at 49, so it's above 40. That's good. MACD's got a positive cross and the trend's up. So Momentum Timer Pro here flagging 10 consecutive daily buy signals. Now keep in mind, we did put a trade on this on the 27th, but look how easy this is. On the 3rd, stopped out for a nice 1.56% gain. Just that simple, my friends. But we know on our long algorithm here for our CTAs, they're showing some potential selling here. But let's take a look at the chart and why I think there could be one last push higher in XLE before the game is over in energy. And it has everything right now to do with that little line going across your screen. It's called the 200-day moving average. Now, a key place of resistance was it. You can see price rallied up, got rejected there. Once, twice, 3 times. The 3rd time it broke through, set a new high here. It's pulling back right into its 200-day, right off of its 50-day. If it holds that, then I think you're looking at a potential run up here into the low 94 level. I don't think from an economic fundamental position that holds, but nevertheless, that's what's coming. Now, something that is not a place to be when the Fed cuts rates, that's the financial sector. Now, a lot of people think, hey, I want to buy the banks when they're cutting rates because people are going to borrow money. Except when you see the delinquency rate rising, Fed rate cut means there's less money for the bank. So I'm not bullish on that sector at all. There's nothing really in the charts that says, hey, this is a place you want to be. But a place you might want to be is emerging markets. Now, we don't have a trade on this, but remember, this has been Wall Street's darling. And if the dollar continues to weaken, it could surge higher. Let's take a look here, because I'm going to make the case of why this one you may want to put a trade on. How about this? The RSI is at 60. The MACD's got a negative cross, but MACD is this case all over the place. Momentum Timer Pro flagging 1 consecutive daily buy signal. Machine positioning looking like it can add here. And we did see that in Goldman's notes that perhaps there could be some buying of global equities. Let's take a look at EEM. And I want you to see why here, because it's sitting right on top of his 6-month volume profile. It's kind of popped up here and pulled back, popped up, pulled back, popped up. So if you were going to trade this on the notion that you could see this thing jump a whole lot higher, and I got to zoom out to the 5-year chart, maybe even more, there it goes, to say if the dollar weakens, you could see EEM jump up here. And that would be the case if you're going to trade this. And again, this is exactly what we encourage our subscribers to do, is control your risk. So you want to keep your stops fairly tight on that. If it jumps up, just raise them right along with it. But I promise you a trade for Monday morning. This has gone out to our CTA Timer Pro subscribers this weekend, and it's on the consumer staples. How about that? RSI is at 46, so it's moving up from oversold territory. MACD's got a positive cross. Momentum Timer Pro validating this on the trend, saying, look, we got 4 consecutive daily buy signals. Machine positioning coming off of a potential short position here. That's a good sign. So we put this buy it open out for Monday. Here's the live stop loss level we gave to our subscribers. And again, while you're checking this out, while you're signing up for those reports, check out our sponsor for today's show. Again, you can Oncolytics Biotech. You can find them on the NASDAQ under the symbol ONCY. Let's take a look at XLP and why I like this setup. Because it's trading in a range. So you notice it comes down to the supply zone. And if you're not familiar with what a supply zone is, on the bottom side, it's where people want to buy. And you can see they bought all along the way. The sellers, they're up here in this supply zone. So right now, the buyers are loading up on staples, suggesting a potential move up here into the mid $82 range. So again, that one's for you for Monday's trade. Again, you can follow right along with our subscribers. Let's talk about the bond market here, because we got stopped out of this trade on, again, another volatile day on the 2nd. With very volatile, we dropped 1.3%. But again, it's all about risk control. You can always come back into a trade here. Now let's take a look at the chart, because even though I'm bullish on bonds from a macro perspective, I'm a little concerned that this might pull back. It jumped up to its 200-day moving average, trying to clear through this short space of volume. If it does, it would suggest it should jump up here to around 90. The risk I have, I think it might pull back and close out this gap. We'll find out here over the next couple of weeks, but I've been saying if this pulls back, I'm going to start buying into bonds. I didn't. I meant to. I was just too busy. Didn't get a chance, but I'll be looking on that next pullback. But something that's breaking out is gold. And again, if you're trading gold, again, keep your stop losses tight. But we nailed a trade on this, just not on the metal, on the miners. How about this? Our meta strategy picked this up on the 2nd, very volatile day again. It said buy in the open, MTP, CTA subscribers, they got the trade. They're now up 3.64%. We've got stop loss levels have been pushed up 82.68. Again, this is exactly what our subscribers are seeing. Trades like this, we make it so easy. We just tell you what to buy. We give you the risk control levels and you do the rest. So now you can see, due to breadth starting to break down, not just on the S&P, but more importantly, on the NASDAQ 100, suggesting the tech bubble could burst when you factor in the fact that machine positioning is maxed out, likely to turn into sellers, a price drop, and that we're facing the corporate share buyback blackout window on the 15th. Then on the 17th, the Fed cuts rate. You can see the bearish setup for the NASDAQ and the S&P here. But again, there's opportunities. Make sure you keep your risk controls tight. But on top of that, there's something we are bullish on, and that is the biotech sector and the stock for our sponsor for today's show, Oncolytics Biotech. And again, you can find them on the NASDAQ on the symbol ONCY. And they're developing Pelareorep, an innovative cancer therapy delivered by IV. And this treatment helps the immune system target cancer cells, showing promises in pancreatic and gastrointestinal cancers. It's earned the FDA's Fast Track designation for pancreatic and breast cancer. And Oncolytics is pushing to bring this therapy to patients through smart clinical plans. Pelareorep is a first-of-its-kind therapy that can make cancer cells visible to the immune system and multiples inside tumors, causing them to burst while sparing healthy cells. It also turns cold tumors into hot ones, triggering immediate and long-lasting immune attacks. This dual action positions Pelareorep as a powerful partner for other cancer treatments. And cancer affects millions, with over 1.9 million new cases yearly per the American Cancer Society. And pancreatic and gastrointestinal cancers are especially deadly, with few effective treatments. Pelareorep targets those tough cancers, addressing urgent needs. Its broad potential taps into a growing cancer therapy market. And Pelareorep is making waves in pancreatic cancer, a notoriously hard to treat disease, as FDA Fast Track designations speeding its path to approval. The Goldman study showed promising survival data for pancreatic cancer patients, and Oncolytics plans to launch an FDA registration study by late 2025. In gastrointestinal cancers, Pelareorep is delivering results. The Goldman study reported a 33% response rate, including one complete response lasting over 15 months. These outcomes show Pelareorep's potential to tackle hard-to-treat cancers. Trials continue to explore its impact. And Pelareorep is designed to be safe, targeting only cancer cells to minimize side effects. Recent gastrointestinal cancer trials confirm it's well tolerated. The safety makes it ideal to combine with chemotherapy and immunotherapy, boosting their effectiveness for patients. Oncolytics is advancing Pelareorep through a strong clinical program focusing on pancreatic and gastrointestinal cancers. The company is pursuing partnerships to combine Pelareorep with chemotherapy, immunotherapy, and CAR T-cell therapies. These efforts aim to accelerate development and reach patients faster. And we think this is setting up a major move in their stock. Let's take a look at this chart, because what do we see? If you're an Elliott wave trader, this is exactly what you're looking for. This is wave one, and then you get a pullback. That's wave two, right into its 50-day moving average, and then you start wave three, and this is usually the biggest of all the waves, setting up a monster potential move. Oncolytics Biotech is a leader in cancer innovation. Pelareorep's ability to destroy tumors and boost immunity is unique. With FDA fast-track designations and promising clinical plans, Oncolytics is poised to make a big impact. This company is creating exciting possibilities for patients in biotech, and you can find them on the NASDAQ on the symbol ONCY. And as always with any company we feature on our show, you're under no obligation to purchase their stocks. Be sure to do your own research before placing any trades and set your stop losses accordingly. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.